If you follow the traditional path to success, you get the degree, find the full-time job, and earn a decent salary. But that salary often disappears into a mountain of credit card statements, student loans, and medical bills. Most American adults carry some form of debt as a standard part of their existence in one of the world's wealthiest countries. A systemic pattern is emerging where the majority of the population ends up trapped in this same financial cycle. This crisis is a mathematically engineered environment. Everyday workers are caught in a vice grip driven by two massive systemic forces. The top half of this vice represents the baseline cost of existence. While many nations heavily subsidize basic services, the U.S. shifts the financial burden of essential needs entirely onto the individual. Higher education is one of the primary drivers. To participate in the modern workforce, millions of students take out massive loans to cover the cost of a degree. Before they earn their first professional paycheck, an American worker is often already tens of thousands of dollars in the hole. Then there is healthcare. Even with insurance coverage, citizens face exorbitant out-of-pocket bills for standard treatments. A single, completely unavoidable medical emergency easily wipes out years of careful saving and hard-earned financial stability. Add to this the daily cost of living. In most cities, rent, transportation, and daily utilities continuously rise, consuming the majority of a decent salary. This pie chart shows how these essential life costs eat up an average monthly income. Once housing, medical, education, and taxes are paid, the worker is left with a 0% emergency buffer. This directly leads to the bottom half of the vice. When something unexpected happens and there is no cash buffer left, people are instantly pushed toward the frictionless availability of credit. Credit cards are everywhere. Lenders make it simple to obtain them, turning them into a required tool for daily survival. This bar chart displays a small necessity purchase of $300. High interest rates, combined with minimum monthly payments, extend the life of that debt for years. Over a 5-year timeline, compounding interest turns that small necessity into a long-term financial anchor. Modern buy now, pay later culture accelerates the cycle. By double-tapping a phone to split a payment, consumers are distanced from the psychological friction of spending real money. To survive the present, people are forced to continuously pledge their future unearned income. Beyond the math, there is a severe psychological toll. Managing these past financial obligations leads to chronic levels of stress and anxiety. Debt forces people to push back life milestones like homeownership or starting a family. Why does a system that drains the population continue to exist? The answer lies in the profitability of the cycle. High essential costs ensure the public must borrow at high interest rates, utilizing an infrastructure built to profit from worker debt. Until the environment changes, carrying debt is simply the cost of entry for American life.